Hello everyone, welcome back to our channel. Today we're going to step into the fascinating world of chart patterns like flags, triangles, ascending and descending wedges, double and triple tops and bottoms, and how to trade them. These patterns can provide us with key insights into market trends and potential trading opportunities, and we will also use them in conjunction with strong support and resistance levels, trend lines, the RSI indicator, and more. So stay until the end to get full value of this video. Let's get started. First up, we have flags. Flags are continuation patterns that signal a temporary pause in a trend before it continues in the same direction. They look like the shape of the flag and are usually accompanied by a flagpole, which is the initial steep price movement. Let's explore our first flag trading strategy using a real example from the Bitcoin chart, where we recently observed an upward movement followed by a pause. You can see the sharp rise in price here, followed by lower highs and lower lows, forming a flag pattern. Drawing two trend lines helps visualize the flag pattern better. We wait for the price to break above the upper trend line to enter a trade. At this point, you have two options: enter immediately at the breakout closing or wait for a breakout and retest of a previous support area, such as the one around the 52,500 level. Additionally, notice the declining volume inside the flag area compared to the days when the price was rising, followed by a volume spike on the breakout. This serves as an extra confirmation. Also, observe the RSI rising sharply above the 50 level, indicating strong upward momentum. Given the strong trend, I decided to enter immediately after the breakout. The stop-loss can be placed below the bottom of the flag pattern, around the 49,800 level. As for the take profit, trail it after a new higher high and higher low is formed, below the 50-day moving average. The outcome? I got stopped out at the 64,350 level with a profit of 21.50%, resulting in an almost 3.6 to 1 risk-to-reward ratio. If you haven't watched the video on take profit targets, stop-loss levels, and trailing stop-loss techniques, you can find it here or in the video description below. It will provide valuable insights for your trading journey. Next, we have double tops and bottoms. These are reversal patterns that signal a change in the trend direction. A double top forms after an uptrend and looks like an M, indicating that the price is likely to go down. Conversely, a double bottom forms after a downtrend and looks like a W, indicating that the price is likely to go up. Let's see another trading scenario that we will trade based on a double top or bottom in conjunction with RSI divergence. In case you don't know what an RSI divergence is, watch the video I've made about the RSI indicator. It's in the description as well. After identifying a potential double top or bottom, look for a divergence between the price and the RSI. Let's really quick explain what an RSI divergence is. A bearish RSI divergence happens if the price makes a higher high, but the RSI makes a lower high and could signal a reversal to the downside. Conversely, if the price makes a lower low, but the RSI makes a higher low, it's a bullish divergence and could signal a reversal to the upside. You could consider entering a position when the price breaks through the confirmation line, with the RSI divergence as your confirmation. Let's analyze Ethereum. Looking at the 1-hour chart, we spotted a double top on March 13, 2024. The RSI shows a loss of momentum, creating a difference between the price and RSI movements. While the price remains at the same level as the previous swing, the RSI is lower. We're waiting for the price to break and close below the previous low at the 3,900 level, or for safer wait for a break of the 3,900 level, a formation of a lower low, followed by a retracement and retest of the 3,900 level in order to enter the trade. So something like this. Seeing the price breaking through the 50-day moving average and retesting it as well, I decide to enter immediately after the first candle closes below the 3,900 level. I short Ethereum at around 38.80 and place the stop-loss above the 50-day moving average. You can also place it above the double top to give the price more room to move. We'll trail the stop-loss again above the 50-day moving average after a new lower low followed by a lower high is formed. This trade happened when Ethereum's value dropped recently. For people who believe in the crypto market and are bullish, especially after the Bitcoin's ETF approval and Bitcoin hitting new highs, it's a good chance to earn money when the market corrects itself. That's what we did and made a profit of 6.70% from this trade. If you enjoy the video so far, hit that like button and subscribe. It helps me continue creating more videos like this. Comment below if you want me to make a specific video or an analysis of a stock, crypto, or anything you like. Now let's continue. Just like double tops and bottoms, we also have triple tops and bottoms. These patterns are similar but consist of 3 peaks or troughs instead of 2. They are a stronger signal of a potential reversal in the market trend. We also have wedges and triangles. Wedges can be rising or falling and signal a reversal or continuation based on the direction of the wedge relative to the trend. Triangles can be ascending, descending, or symmetrical and represent a period of consolidation before the price breaks out in the direction of the prevailing trend. Both wedges and triangles share similarities with the flag pattern. However, the distinction lies in their formation. While the flag pattern typically features parallel trend lines, wedges and triangles exhibit narrowing patterns before the breakout or breakdown occurs. Now, let's visualize them. Here are the wedge patterns suitable for long positions. You can identify a long position using either of these 2 wedge formations. One may occur during an uptrend, while the other may manifest during a downtrend. Now, let's explore wedge patterns conducive to short positions. Just like their long-based counterparts, these wedge patterns offer opportunities for short positions. Moving on to triangles, they come in ascending, descending, or symmetrical variations. Here are the types of triangles suitable for long positions. And here are the ones you can find in order to go short. Let's have Ethereum as an example again, where we observe a bullish symmetrical triangle pattern. Notice how the price narrows between the 2 trend lines, forming a triangle shape. We can consider entering the trade after the breakout, especially while the RSI gains momentum and approaches the 70 level. In this scenario, I decide to wait for a breakout and a retest of the previous high at around the 2100 level. Several days after the triangle breakout, the price retraces back to the previous high. That's the support area over here. Furthermore, upon retesting the same area, it forms a double bottom pattern. We also see the price bouncing off the 50-day moving average over here. Additionally, the price aligns with a round number at the 2100 level, offering multiple reasons to consider a long position. So, we have a trend continuation scenario with a price breakout from a symmetrical triangle pattern, a retest of the previous high that is now a support area, coinciding with a significant round number of 2100 level, a double bottom setup, complemented by a bounce off the 50-day moving average, with the RSI gaining momentum after rebounding from the 50 level. We enter a long position following the formation of this bullish candle. Our stop loss is positioned just below the significant round number of the 2000 level, around the price of 1900, allowing for additional buffer room in case of adverse price movement. As for the take profit, we could aim for a 1-to-1 or 2-to-1 risk-reward ratio, or just follow the classic trailing stop approach. If we had targeted a 1-to-1 ratio, we would have already secured profits. Similarly, a 2-to-1 ratio would have yielded profits just before the price began retracing. Alternatively, if we trailed the stop loss, we would still be in the trade as of today, with the trailing stop loss at a profit of 23.5% so far. Let's see another example on Euro-USD that we have a trend reversal bearish rising wedge. It has been an uptrend. We can see the wedge break out to the downside and the price moving below the 50-day moving average as well. We can also see the price creating higher highs while the RSI has lower highs. Bearish divergence again. After the price breaks the wedge and the moving average and the candlestick closes below, we can open a short position at around 1.485. We set the stop loss above the highs at 1.525, and we are trailing the stop loss again above the moving average after each new lower high is formed. We later got stopped out with a profit of approximately 14% at around the level of 1.275. Let's analyze a last example using XRP, featuring a bearish trend continuation wedge pattern. As we observe a clear downtrend, we identify the formation of the wedge pattern. Our entry point is signaled by the breakout of the wedge and the moving average. Additionally, the RSI indicates downward momentum crossing below the 50 level. For our stop-loss placement, we can position it above the recent high at 0.95, considering the two recent bounces. Alternatively, I prefer to set it slightly above this point, aligning with the significant round number level at 1. Therefore, the stop-loss is set above the level 1 price area. The only problem here is that we need to closely monitor the trade because while the take profit needs to be minimum 1-to-1 risk to reward ratio, if you zoom out, you can see a strong support level around here, and that's not 1-to-1. So the way we will manage this trade is by adjusting our stop-loss to break even once we reach the support level around the 0.60 area, ensuring that we run the trade with no risk after that. We then have several options for the take-profit target. Either stick to a 1-to-1 risk to reward ratio, or go for a 1.5-to-1 ratio, or even the classic way of trailing the stop-loss above the moving average. In all three scenarios, the trade yields a profit, ranging from 40% to 60% depending on the chosen risk to reward ratio or trailing strategy. Remember, while these patterns and strategies can be incredibly useful, they're not guaranteed to work every time. Always use them in conjunction with other indicators and tools to increase your chances of success, like the RSI indicator, momentum indicator, use price action tools, and identify strong support and resistance levels, trend lines, and whole numbers. You can watch this Trading Mastery Series playlist that I include all the essential videos that you will need to start trading. Yes, this one in the middle of your screen. That's all for today's video. If you found this helpful, don't forget to like, subscribe, and comment below for more trading tips and strategies. Until next time.